Stephanie Kaufman. I'm currently working with Kaizen Asset Management and I'm focusing on the retail sector. Recently there's been very strong earnings growth coming out the retail sector. This has been a function of cost containment, which has led to rising margins, increasing volumes, and this has led to ROEs being pushed over 10 years from like 20%, where they're currently trading at over 60%. There are obviously macro headwinds facing the industry, but we still feel that the trend of growth in real wages is continuing, and that lower LSMs will continue to benefit from social grants. So once we've taken a look at the macro environment, you feel that this filters down into an industry's perspective of the retailers. The retailers are trading at unprecedented PEs, and this is unlikely to reverse over the next 12 months. But so on an absolute basis, the South African retailers are expensive. But when you look at them on a relative basis compared to their international counterparts, they are trading at far more attractive forward multiples. And we feel that the competitor space, yes, it is becoming very overcrowded, and as consumers become more value conscious and aware, it is becoming more difficult for the retailers to operate in the space. But we are looking for those retailers that are best positioned for the likes of an African expansionary plan, where we see the most of the growth coming out of. So once we've taken into account the macro and industry analysis, we use this to filter into our fundamental company analysis, the bottom-up stock picking, where there are various processes in our equity analysis. However, we focus on the earnings outlook of the company, an assessment of management, and where the retailer is positioned within the market. A couple of our top picks within the retail sector are the likes of Shoprite. We feel there's very strong management. They've got great operational efficiencies, owning their whole supply chain, and they've got very clear brand and demographic positioning, and with strong African expansionary plans. And they've already finished their capex cycle in South Africa, and they've moved on to their capex within Africa. For similar reasons, we like Mr. Price, giving a clothing retailer example. They're following Shoprite into Africa, going into the retail space there. They have limited reliance on in-store credit to drive sales, with less than 20% of their sale base being made up of credit sales. And they have a very fast value orientated fashion model that has been attractive, and it's going to continue to gain market share within the industry. For similar reasons, we like Woolies. We feel like they very clear demographic positioning, they price setters, and they don't have any clear competition within that segment of the market.